Hi, for those of you who don't know who I am, my name is Sam Wong. I've graduated with a Bachelor of Finance in 2.5 years. I chose finance because cash is the king. I started trading when I was very little, and I always had passion about making some money from the stock market. I'm not sure if you agree, but trading at the end of the day is just about number. It is a number game. Yes, I agree fundamental is important. However, we need to understand things changes over time. I mean, if we're talking about today versus 20 years ago, it doesn't even have technology. Zoom, it doesn't even exist. Amazon doesn't exist, right? So the trouble of people who are analyzing the fundamental is these new companies that actually have a growth more important than the actual revenue earnings or balance sheet you're looking at, whether they have enough cash flow to persistent and be able to execute the ideas and deliver were more important than what we learned in accounting classes. There seems to be something that I argue that the adjustment of theory need to be adjusted over time. Over the last 10 years of career, I started as an analyst fresh out of college, working month-end closing, variance analysis, and many projects. This doesn't only grow my professional life, but also gave me insight of how to look at things differently, different business operations, especially oil and gas industry. I'm personally interested in stock market, so that's why I'm here today. And for those of you who know and receive my email distributions, knowing that I have started to talk about and giving insight on P-market and what's going on. There are few things I'm actually different than other analysts that you may follow and hearing from. I'm more from the investor perspective. What does that mean? If I'm the investor, I don't want somebody to talk to me for 2 hours, tell me what to do, right? I mean, at the end of the day, after 2 hours of listening to presentation or reading the script, actually still didn't get the information you're looking for because they have a fancy title tell you they attract you to start reading, but really didn't solve the puzzle, right? So I'm not going to do that to you. And also, I think there's always some fundamental thing that people will overlook, how to think in order to look at your portfolio, determine what to do and what is best for your interests, right? It's also important to understand the concept between realized gain and unrealized gain, which is something I've stressed a lot. Well, something look good on the paper, you can say, hey, I made $100,000 today, but not until you sell the stock, you actually don't see the money and pocket into your account. So if the market like this morning, which would drop, today Dow I think at the current moment drop about 850 points, you actually will not be able to get that much money that you see in the early couple hours ago. So this is something very important to keep in mind, right? Simple enough. And also the other thing is, I know a lot of fund managers will tell you this, right? Well, don't time the market. I actually disagree because of the opportunity cost concept and also cash flow, right? I mean, if you put money into the account, no cash, right? You cannot use the cash anymore. So not until you sell the stock, which is highly liquid, I agree, then you can take the money, right, which may take 2 days actually into your account to buy something you need. So opportunity cost is very important. I think a lot of credit analysts really ignoring that fact. Well, having said that, I already have a distribution list starting a starting point, right? Somebody have to start somewhere. In the YouTube, introduce yourself, which I only going to do once on this video, and hoping forward, I hope people know who I am and will able to follow me to give me some good stock tips and how to invest, and also what action need to take in the portfolio. Each morning, I actually will provide a P-market view. Also some recommendation if the market is having some opportunity. Actually, what I did differently is I read a lot of other people articles, then I can determine whether these stocks are for you to invest or not. Obviously, people can come with 10 stocks and tell you to buy. Well, you can hit 1 or 2, so it really doesn't tell you anything because you don't have money to buy all 10 of them. Or if you buy 10 of them, while one of them may be really good return, the other one will actually lose, so you end up having a loss. So I hope that will help you. So today is Monday, October 26th. it's not a good day for the market where all the major indices are falling right now. So why? So to explain this in a very high level, over a couple of weeks or days, people or the market already priced in the stimulus. Well, we all know that we're not going to get a stimulus at least after the election. Then at the same time, people were ignoring the fact about the risk of coronavirus being outbreak and spread. The number have been continued to rise between Europe and US. So that brings a concern whether the economic activity will be slowing down or have to shut down again. This week also will be a really earnings season again. So it'll be very interesting to see how things shape up, if there any potential of certain stock like FAAG, of course, which is Netflix, already reflected earning and it didn't go very well. So their price actually has been gone down. So again, I will be posting videos on a as needed basis, and I hope you'll be able to find what you need. And if you have any questions, you can always feel free to email me. And I hope that this video in the long run will help you to really strategize. In a year from now, you'll be saying thank you for me that following my solid different view of analysis of earnings that you will put it in the market and really can materializing, and then you can take a gains, either a vacation or some extra money on your pocket. Also, right now, if you know that pandemic wise, China is the only country that actually kind of fully recover, because they do have some cases recently. So this stock actually, particularly in November 11, which is similar to what we have at Christmas, they will have a lot of huge sales online. So a lot of companies like PDD, Simple, or JD.com will be which is Simple JD, will be the one actually will be having a lot of sales, and project that they probably will have a pretty good earnings as well. So I anticipated these stock will be going up. Also, there's something called Ant Group, which will be actually get approval from Shanghai Securities Exchange as well as Hong Kong Securities Exchange, which will be issuing an IPO. This will be projected to be the largest IPO, bigger than Saudi Arabia oil IPO in the world. So I anticipated that the stock, which is called BABA symbol, Alibaba, will follow the lead. They actually have some ownership of this stock, so it will actually be going up. The price currently now is at $306. I think it was 313, the highest today, and it dropped. So it will be actually pretty good if it's around $300. I think you buy it, you may get 10% return pretty quickly. Again, I appreciate your time looking at my video. If you have any questions, feel free to send emails, and I'm actually will do my best to answer your questions. Have a great day.